My name is Oliver Gottschalk, Associate Professor of Strategy at HEC Paris and Academic Dean of the Triumph Global Executive MBA program. It's with great pleasure that I can release today a new piece of research on private equity performance, in particular a ranking of US pension funds and their buyout portfolios. The limited partner ranking by HEC Paris's Private Equity Observatory in collaboration with Pension & Investments is the first ever ranking of US pension schemes, US public pension schemes, portfolios of their investments in private equity funds. It is the first time ever that we've been able to analyze data on individual fund investments of these public pension schemes at a sufficient level of granularity that allows us to accurately score the two important dimensions of performance of these investors, the return dimension and the risk dimension. Based on a multi-year research effort, we've been able to analyze data provided by data provider firm Preqin. First of all, on which public pension schemes have invested in what type of private equity funds, and then second of all, what is the performance of these funds, and finally, what is the characteristics of the underlying investments of these funds. All this type of data have been analyzed to compare on a relatively homogeneous yardstick the risk and return dimension of these pension schemes, allowing us to basically rank and classify the performance characteristics of those major pension schemes, overall 50 of them, who are managing billions and billions of dollars of private equity buyout investments on behalf of their constituents. Well, the private equity asset class is called private by design. It's different from public investments in the sense that there's no general disclosure requirements. So information tends to remain private, tends to remain confidential. So for a long time, private equity has been a black box, both with respect to the investment firms, the private equity firms, the GPs who've been making investments, but also with respect to the institutional investors who are investing in these funds in search of an attractive risk and return profile. Major efforts have been made over the last couple of years to shed at least partial light at this particular asset class, and several data providers, Preqin being at the forefront of them, have been successful in obtaining large quantities of data on the performance of individual funds and on their underlying investments. Through our partnership with Preqin, we've been able to now analyze this data and shed light for the first time on these important characteristics of this asset class. Private equity remained opaque for a long time, even though it is only often a small part of the allocation of US pension schemes. It's a very important part of the allocation because it's one that has the potential to drive substantial returns and therefore contribute to the overall profitability of those pension funds in an important fashion. It has been managed professionally by those funds for long periods of time, but the general ability of a fund manager, of a CIO of a plan out there to compare their own performance against other pension plans with private equity exposure has been limited. The objective of this ranking has been to shed light on these elements, in particular identify whether and to what extent the plans differ in the risk and return characteristics of their private equity portfolios, and then more specifically also document those approaches among the public pension schemes in North America who have led to particularly attractive risk-return considerations, i.e. who are overall scored favorably based on our methodology and show up at the top of this ranking. We disclose the top 10 performers only out of a sample of over 50 funds who are sufficiently mature, large, and established to kind of qualify according to the ranking criteria, because we want to put a spotlight on the really strong performers, demonstrating best practices and allowing others to learn from this, while the agreement with our publication partners, Pension & Investments, is that we will never disclose the mid or the bottom part of the distribution in public. We don't want to harm anybody. However, obviously, we're happy to engage with all other pension funds or all other limited partners for that purpose to allow them to also gain insights on the characteristics of their private equity portfolios on a confidential basis. If a given pension fund is not on this particular list of top performers, it can obviously have a variety of reasons. One obvious reason would be that we had data on them, they qualified based on our criteria, but they just didn't make the cut. An even more likely scenario would be that the data we obtained on them was not sufficiently complete, or frankly, their portfolios were not large enough to meet our initial criteria based on which we pre-screened the universe of pension schemes for this exercise. Finally, and importantly, we restricted the assessment from the get-go only to US public pension schemes which disclose enough of the information on their private equity portfolios in order for us to assess their risk return with a reasonable level of confidence and accuracy. So for example, other pension schemes, corporate pension schemes, other private equity investor type endowments, foundations, fund of funds, sovereign wealth funds are structurally excluded from this first release of the ranking because through the third-party data sources that we work with, we were unable to obtain data access to those type of investors. In the future, it's absolutely our ambition to evolve and expand the coverage of these rankings. We will reach out in due course before the next release of this particular ranking in about 9 to 12 months' time to other limited partner types, asking them in confidence for the type of information we need to rank them, always, of course, with the understanding that if and when their performance is sufficiently strong on risk and return to kind of classify for the top performer list that we will publish, they will be published. Otherwise, information remains confidential, and also no information about who contributed data, who worked with us, will ever be disclosed. If a given limited partner is interested in knowing more about how they score on the two dimensions, risk and return, that we analyze, we're more than happy to engage with them directly, work with them on a consultative, on an individual basis, so that we allow them to benefit from the same overall insight in how they score against that universe of US public pension schemes, and in particular also then work with them to see what could be lessons learned from this assessment and a comparison to the best practices that we document in the ranking. If you look at the ranking itself, first of all, of course, it's interesting to see how different funds and pension schemes rank on this ranking, and in particular, what diverse characteristics you have out there, because the initial public plans that we ranked and analyzed differ quite substantially in their scale, in their maturity, in their approach to private equity investing. Yet if you look at the top 10, you have a pretty mixed bag. So there seems to be more than one path to success, more than one path to outstanding risk-return characteristics. Obviously, you see some of the players differ. They seem to be really strong on the performance dimension, on the return dimension, and only average or slightly above average on the risk dimension. So you see immediately different approaches, and some of the obvious variables are actually not showing confirmation of the hypothesis. One could say, well, it's impossible to be really good if you manage a really large portfolio. Well, several of the top 10 players are kind of in the category of the very largest funds out there. So scale does per se not seem to be any limitation to outstanding performance if you consider risk and return. At the same time, specialization, maturity of the program, age of the private equity portfolios, all don't necessarily play a role. So you really have to look deeper inside the individual plans to say what policies, what decisions, what quality of manager relationships to private equity fund managers have actually been driving the returns.